Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into next week? Hedge funds and money managers, they have yet again increased their bullish stance on COMEX gold and also up their net long positions in silver in the latest week, whilst also raising their bullish wagers on US crude oil to a 3-month high. Now, of course, last week, particularly on Friday, gold surged to the upside, over 2% move, as investors and traders interpreted the US Federal Reserve Chair Powell's speech as leaning towards a dovish stance, and President Donald Trump's latest comments exacerbated the trade tensions between China, with China, of course, unveiling their retaliatory tariffs against 75 billion worth of US goods, including crude oil. So with that had a big catalyst on Friday for a breakout to the upside, with gold coming very close to the 6-year highs again. Silver is also now close to the 1-year highs, and we've also seen a significant sell-off in oil, all of which we discussed, of course, earlier on in the week of asset of the day, where we had mentioned that we've been buying in on gold at the lower end of the recent channel, around 1,500 US dollars per ounce. We've banked 650 points profit on 3 of our positions on Friday, and we've now continued to ride the rest of the positions as we go into next week, still looking for a potential tap all the way up to the 6-year highs at 1,534 US dollars per ounce for gold. So I do hope a lot of you managed to capitalize on those moves. For all of you that watch our channel and do follow us on YouTube, very aware that we've had a bullish bias on gold this week, whilst unfortunately many retail traders have yet again been liquidated and stopped out, being on the wrong side of the trade, getting squeezed on their sell shorts, as we've seen yet again another significant breakout to the upside with gold. But of course, those of you that follow us at the Gold and Silver Club, I do hope that you managed to capitalize on the breakout to the upside. So with that, let's move over to the charts and let's talk you through what we're looking at as we go into next week. First of all, going over to gold, and just to really identify with you what a lot of retail traders have been looking at in this market from a purely technical point of view. Unfortunately, a lot of traders have been looking at a potential head and shoulders pattern on gold, and again taking a break below this channel on Thursday through to Friday, getting trapped with their sell shorts in this market, and then you have seen another squeeze to the upside here. So you've broken through that channel, only a very temporary break of support, and then of course that breakout to the upside that we had anticipated earlier in the week on gold asset of the day, where we had of course mentioned that we are buying in around the 1500 level, and we are looking for a retest over the course of the week back towards the weekly highs and back towards the 6-year highs as well, which we've come very close to testing, just $4 short of that on Friday. But again, it takes patience in these markets. You also have to have stamina for some of these moves, where we've eventually seen a very large breakout, no doubt helped by the comments from the Federal Reserve, which we have been waiting for, with Jerome Powell's speech on Friday in very firm focus throughout last week. And of course, the breakout on gold has been further helped by the Chinese tariffs which have been put on the USA, and of course Donald Trump's retaliation to those tariffs as well, which we've seen later on in the session, which has helped gold to break out to the upside. Another point that you want to note on gold at the moment is just multiple bull flags that we keep on getting. In fact, if you go all the way back to the breakouts that we've had since May here, you'll see the amount of times now that gold has continued to break out to the upside with a view to a continuation pattern each time. Many retail traders, I should also expand on that, it's inexperienced retail traders. Many of you that do watch our YouTube channels, no doubt you've been on the right side of these moves. It does tend to be more the inexperienced traders in the market that keep selling each time that we look like we're about to break down from a head and shoulders or a V-shaped reversal pattern or a break of a trend channel. They're getting on the wrong side of the trade. Even as we go into next week, 60% of retail traders are selling into gold, with gold almost breaking out to 6-year highs here, and of course closing limit up right at the upper end of this channel. So we've seen now 1, 2, 3, 4, 5, 6, 7, 8 breakouts to the upside. I actually include one more here as well, where we have seen again another false breakdown in price. 9 times now that we've seen since May, the amount of times that retail traders are getting in on the wrong side of their positions here with gold. So with that, congratulations to everybody who's been patient here, who capitalized on the pullbacks around 1500 and below this week with that very significant breakout to the upside. As I mentioned, we have banked 650 points on gold, and we continue to ride the position now as we go into next week. So that's really what we're looking at from what happened last week, but what are we expecting going into next week? So if we go over to gold price action, where we have closed at 1,526 US dollars per ounce, the next magnetic level and key level for gold is going to be $1,550, and then of course you have the potential to start making your way all the way up towards 1600s. But as we go into next week, the anticipation is we may just get shallow retracements here. We have closed at the weekly highs and also very near the daily highs as well. It won't take much to push higher, clip the 6-year highs here, and then make a move up to 1,550 US dollars per ounce. Note as well, we do have a bank holiday in the UK on Monday. Typically each week on the Monday, the cycle is that during the London session, gold will tend to pull back and be under pressure. But as a result of the UK bank holiday on Monday, we may not get much of a retracement, particularly as Donald Trump retaliated with tariffs against China just after the close on Friday, so we might actually see gold gap up. Certainly the S&P 500 could gap lower, and oil as well, so I would look out for that on the open. But I am looking for another drive higher here with gold going into next week, especially given the cycles that we are in at the moment. And we're also, of course, in the month of August, which I've mentioned many times before, is typically one of the strongest months of the year for gold. You've got January, February, and also August. So we do have 3 long positions now going into next week, 650 points that we banked on our trade, and we're letting the rest of that position run. I would look at potentially we may get some retracements going into next week as well. If we do, I would look at those as opportunities to buy back in, as long as we do see evidence of support. So potentially any pullbacks that we get going into next week, I would then look for those to be shallow with a view to then take the price back towards the upper end of the channel and tapping again the 6-year highs. That's what I'm looking out for as we go into next week, and the potential to hit $1,550. Support, of course, is very likely to come in around that 1,500 level again. If we were to revisit that level, I suspect we won't go as low as that, but if we do, again, I would be looking for evidence of buying coming in at that zone. But it might be that we just push higher off the open on Sunday and then start to make a move up to the 6-year highs, or we get a shallow retracement, which then could lend to a buy opportunity in order to take the price back up as well. Silver, we mentioned this too on Silver Asset of the Day last week, where we essentially were looking for the same here with silver, for a breakout back towards the recent swing highs, tapping the 1-year highs. We've come just short of that on Friday. I am looking for further upside on silver going into next week and breaking back out towards the 1-year highs around $17.50, and then coming back up towards $17.70. Then the magnetic level above that would be $18. So again, very similar to gold here. We might just push up higher right off the open and break above those levels in the early part of next week, but I would look at any pullbacks back towards around the $17 level, that magnetic zone of support, as potential opportunities to buy in if you didn't already have a position exposure to gold or silver. I would look out for support to come in at that level, and just below that you've got 1685. So really I'm looking at any retracements at the moment, buy opportunities between now and the end of the month, but we might just continue to drive higher here on gold and silver. I will add to that though, our positions are protected, especially on gold going into next week. So if we were to see a significant sell-off, I don't think that we will, but if we were to see a big pullback in gold next week, very simply our trades are protected, and we've also banked a large chunk of profits as well. But that's what I'm looking at as we go into next week at the moment. Also note that the dollar had a considerable sell-off here on Friday, a bull trap to the upside, and then we've also had quite a significant push lower here into the close. So we want to see whether that will follow through to the downside going into next week, or whether we need to retrace slightly higher and then see another round of selling. Then moving over to oil. So the expectation on oil last week, as we mentioned on Oil Asset of the Day, was that we would find resistance between 56 to 57 US dollars per barrel. We indeed did find resistance at those levels. You can see where we've come back up towards the upper end of that channel. We've tapped that zone midweek on Wednesday, and certainly on Thursday through to Friday we've actually come down and broken down to the levels that we suggested, which would be a revisit back towards 53 US dollars per barrel. So we've seen that play out for oil. You can also see where that developed into eventually a bear flag, and we've broken down also from the pennant here, where we have had some pressure to the downside. We've seen another sell-off here as a result of an escalation in trade war tensions, which of course always does tend to have a negative impact on oil, but can provide a lot of support to safe havens like gold. So as we go into next week, I do note that hedge funds and money managers, they have increased their overall net long positions on crude oil for another consecutive week. We're actually at the highest level in 3 months for net longs on US oil going into next week. So we may just see support come in again again between 50 to 53 US dollars per barrel here with oil. Normally the month of September is quite supportive for oil, but obviously we want to see how things develop with respect to the trade war tensions, because these additional tariffs do immediately have a negative impact on oil. So I want to see whether we're going to consolidate around 53 or potentially tap slightly lower back towards the 50 to 53 US dollars per barrel zone, then setting up for a buy opportunity as long as we see evidence of buying at that level. So that's what I'll be looking out for going into next week. Potential for a bit more of a pullback here, see if we get support, and then leading into a potential buy opportunity as we then progress into September. Normally the end of August is actually not that bullish for oil, so we might push slightly lower, consolidate at the lower end of the channel, and then I'd be looking for oil inventories, for example, on Tuesday, the API data, Wednesday's oil inventories, to see whether we get a drawdown or an oversupply. If we were to get a drawdown, that could be a catalyst for a bounce higher, and if there's any sort of resolution with respect to the tariffs between the US and China at the moment, that can be supportive for oil. But I am expecting potentially a little bit more downside before then setting up for a rally into September on oil. But for me, certainly going into next week, gold is the one to watch. Well done to all of you that capitalized on this market, this breakout last week. You've been following our channel. We had a lot of comments with respect to that with our forecast for this week, where we were expecting a breakout to the upside, but we did say be patient. We may not see it during the course of the week until we get the speech from Jerome Powell, and that was further compounded by the comments from Donald Trump and also the additional tariffs from China as well, which all led to this significant breakout to the upside with gold, where we had mentioned that we were buying in around the 1500 level. So well done to everyone who caught that. And again, as I've mentioned before, you really want to make sure that you have an edge in the markets. It's very important that you're not only utilizing technical analysis. You've just seen we've been discussing technical analysis together, but you also want to be marrying that up with a research-driven approach where we are utilizing our in-house proprietary intelligence, and we're also combining that with our knowledge of hedge funds and money managers, their positions in the market, what the smart money is doing. We're looking, of course, always what the retail traders are doing, what the overall market sentiment is, further compounding that with research, cycles, seasonality, fundamentals, geopolitical news, and then we utilize technicals for our execution to generate trade ideas, which of course is a very different approach to only using technical analysis. That does not give you enough of an edge, in my opinion. And of course, if you would like to learn a research-driven approach and join a community of successful traders, there is an opportunity for you to join us. As a member of the Gold and Silver Club, you learn a research-driven approach. You have access to our exclusive live trading room webinars. You get access to real-time trade alerts, trading research and market insights, access to our private Members Academy website, and also access to support and one-to-one mentoring. Very simply, for more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. If you haven't done so already and you want to catch up on last week's asset of the day, where we have been discussing and forecasting the moves that we've seen on gold over the course of this week, please feel free to go back and watch those videos from last week. And as always, do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.